Good morning. I'd like to talk to you about home maintenance and home improvement. Are they tax deductible? I have been asked that question twice too recently, and I decided to talk about it and let you know in case you have a situation that you are trying to sort out. So home maintenance and home improvement are not tax deductible unless you have a business and use a home office to run your business, and you use that office exclusively for your business. What is home maintenance? It could be a repair of the roof, a repair, a plumbing issue that you repaired. So those repairs that benefit the whole house are tax deductible if you have a business office at home. So you calculate the square footage of your office compared to the whole square footage of the house to find the percentage, and that same percentage you will use it to, you'll deduct that percentage, you'll apply that percentage toward the cost of the repair, and that's the percentage of that repair that you can deduct on your taxes for your business. And that's if you take you claim actual expenses on your taxes. I don't claim actual expenses for my home office. I prefer the simplified method, and the simplified method is, I believe, $5 per square footage that you can deduct up to a certain amount. So, and yeah, there is a certain square footage maximum that you can deduct when you use the simplified method. And I like the simplified methods because you won't have to report those deduction back when you sell the house. But when you take you claim actual expenses, you'll depreciate improvement as well. And when you sell your house, those depreciation, you have to add it back to your basis of the house to calculate how much profit you make from the sales. So you have to track those deductions. Home maintenance is not tax deductible if you if that's your main residence and you don't run a business from home, you don't have an office exclusively for your business. If you are a teacher or a professor and you have an office that you use for your work, or if you're an employee and you have an office at home that you use for your work, unless it's required by your employer for you to have an office at home, you cannot deduct those expenses either. So it all comes down to, you can only deduct home maintenance if you have a home office for your business. But what about home improvement? Improvement could be replacing the roof on your house, changing the siding, upgrading your electric or your plumbing. So that's for the whole house. Those expenses, well, if you have a home business, once again, you take the percentage of that cost and you depreciate it over the lifetime of the house, and usually it's 27 years. But the amount of depreciation you took every year when you sell the house, you need to track those deductions and add it back to the basis of the house. So let's say you sell the house for $500,000, and you need to know the original value of the house when you purchase it. You'll add all those depreciation back to it, or you'll add all those improvement costs back to the original value of the house minus the depreciation. Am I saying it right? Yes, minus the depreciation. So, and then that will be compared to the current or the actual value of the house by the time of the sales. The lesser amount will be used as the basis of the the adjusted value of the house, or the adjusted basis of the house, which will be deducted from the sales. And the profit, you are exempt about $250,000 for single and $500,000 for married. Any profit you make from the sales, you have to take that amount out of that profit before you pay tax on the rest. And the same thing apply if you don't have home office, but you have improvement. You have made improvement, like you remodel the kitchen, the bathroom, you add another room, or you add the garage attached to your house. Those are improvements that you need to track those receipts. And when you sell the house, you will adjust the basis of the house. So the original value, the original cost added to those improvements will be the basis of the house, and then you will compare it to the current value of the house at the time of the sales, and you will use the lease of both as the adjust basis for tax calculations. Then whatever you sold the house for minus that adjust basis between the current value and the original value or the original cost, plus all those improvements, whichever is is the least amount, that's what you use, deducted from the cost of the house, and the difference is your profit. And you are allowed to take $250,000 if that's just you, for filing marriage joint. You are allowed to take $500,000 profit out of 500 to deduct $500,000 out of the profits, and if you have anything left, that's the amount you pay tax on. So home improvements help you in indirectly deducting or reducing your taxes, but it's not directly tax deductible. It only comes into play when you sell the house down years later. So you can track those expenses, and when you sell the house, that will helps you. It might helps you, decrease the amount you will pay toward tax after you take $250,000 profit. You deduct $200,000 profit out of $200,000 out of the profit, or $500,000 out of the profit. So a lot of time when you sell your main residence, a lot of times you don't owe tax on it, unless that it increase a lot over the years. It increase in value a lot over the years. So to summarize everything, home maintenance and home improvement are not tax deductible, but home improvement can help you indirectly reduce your taxes when you sell your house. So you need to keep those receipts when you make a major improvement to your house, so that you can decrease or you can increase the basis of the house when you are calculating how much profit you make or you made from the sales of that property. Thank you for watching. I'm Nina from ninasoap.com. I will invite you to like, comment, and subscribe to our YouTube channel, and you are as well invited to send us your question. What would you prefer we talk about on our channels to help you with your situation? And while we are talking about home improvement, what you can deduct and what you cannot deduct. If you have a business at home, I will recommend L.L.C book. I have a lot of those books and I use them. Let me show you one of them. Most of them are written by lawyers. If you cannot purchase them, I would recommend you check with your local library to see if they have them. It's worth having those books on hand. Even if you have an accountant that prepare your taxes, it's good to be knowledgeable of what you can deduct and what you cannot deduct. As you can see, I have many of them. I check them out of the library to read, and when they have the book sales, I purchase some of them as well. And this one, in fact, I have many here. Deducted is one of the books that I read as well, and I have one on hand. Even if you check it out of the library to read, which is very important, it's good to have it on hand. That way you can go back and look for information when you need it. And it's L.L.C written by professionals. Most of them are lawyers. So they have good advice, good explanation of those deductions that you can take or you cannot take, or how you can save more by organizing, your business in a way that will benefit, that will help you take most deduction. So you have home business tax deduction, keep what you earn, by the same author. So I have written this one, I have read this one as well. We can see here, deduct home office expenses, understand Obamacare deduction, avoid the risk of being classified as a hobby. So I will highly recommend, if you have a business at home, to get this book. And I'll try to put a link below the video in the description area for you to look for it. Is very important. It has a lot of information in it. It will help you during taxes to claim what you need to claim. And even if you have an accountant or a CPA that does your taxes, it's good to discuss those issues with them, because they can make mistakes, or they can, everybody makes mistakes, but the business is yours. The deductions are yours as well. It is your job to make sure that you are claiming what is yours. So don't just assume that a professional is doing the job for you, therefore he knows what he's doing. You need to be in charge of your business and let those professionals that prepare your taxes, let them know, or ask them if they are, if they are taking all the deduction, if they are claiming all the deductions that they have to. Sometimes they might even claim more than they should. So it is your job, because when you are audited, it is your responsibility to provide all the documentation that you have on hand to support those deductions that you took. So just don't assume that somebody is preparing the tax for you. You'll be the one on the hook if IRS come after you. So I have many of those books here, and I will recommend, if you have business at home, to have few of them at home for your own references. Thank you for watching. I'm Nina from NinaSoap.com, and please send your question our ways. Anything we can help you with finances wise, we'll be happy to share our knowledge with you. Thank you.